Hi guys, welcome to the video. So today we'll talk about emotional investing. So I guess many of the beginners will happen to have this kind of symptoms like emotional investing, and the strategies will be pretty bad and the result will be us losing money. So there are 4 symptoms of that you can make a checkpoint that we're actually investing with our emotions. Okay, first of all, I'll in the middle of the video talk about, is emotional that bad? Actually, it's not. But most of the time, if at the wrong time we'll use emotion to invest, most of the time we'll fail. So the first symptom is greed and fear. So we have to understand that this is really human nature. Because we don't have any legit analysis like valuations and technical analysis, then we really have to rely on our experience, right? So our experience is always greed and we buy more, and then we fear and then we sell more. But that is not how the market works, because the market, the assets, the price will go up and down depends on the valuations, or in short term, in speculations. It's never going to be rely on our greed and fear, because we're nobody in the market, right? So this is the first symptom. The second symptom is hesitation, or you can say procrastination. Because when the time comes, we want to invest in something, let's say the stock. When it hits $5, I'm for sure will buy the stock. But at that specific time, when we want to press the button saying buy, and then we'll think that, am I that smart? Did I do something wrong? Did I miss something? So should I think something more or do some more homework before I invest in this stock? And time flies. And then 1 hour passed by, 1 day passed by, or even 1 week passed by. The chance, the profit and loss ratio is distorted already. So if you procrastinate, that is also human nature. But there's nothing good to do with the investment strategies. The third one is to invest in spotlight assets. Okay, what is spotlight? Meaning that it's really focused by the market. Usually it means that the price has gone up or move in a certain direction for a really long time. Let's say a stock has been going up for 1 day, 2 days, 2 weeks, and 100%, 200%. Because again, we don't have really legit knowledge or analysis to analyze whether or not the valuation is fair, overvalued, or undervalued, then we really have to depend on the track record. The track record tells us that 9 out of 10, the stock is going up. Then why not I just buy it now? But sometimes you get it right. Sometimes you get it right for even a couple of times, and you're being too confident and you suddenly buy a lot more, and that time you lose your money big time. Okay? So again, this is the third symptom of the emotional investing. The fourth one is generally people will ignore, is your experience and your feeling that day, that specific day. So that is proven to be true because some of the more outgoing people, if they happen to see more friends, talk more on the phones, and be happier that day, they will tend to overtrade. If you're kind of sad, kind of introvert, you kind of procrastinate more and undertrade. So either overtrade or undertrade is not correct. Because if you trade or not, it's because of the analysis of the homework and the chance of the probability. It's never about these 4 symptoms. So how should we solve this problem? The first one, it will never go away. Don't be naive, it will never go away, and it shouldn't go away, because being emotion is being like a human. Being emotional is sort of like an alarm saying that, oh, this news is kind of intimidating. Should we do a homework over again? Should we sell it or buy it now, right? So it's an alarm, but when the alarm turns on, whether or not you choose the right homework, right research to do, that's our business, that's our experience, that's the homework that we should do. So the second one is about emotional is good. It's about, after all, it's life, right? Because we want to invest, because we want to protect our lives, our loved ones, the housing, the lifestyle in general, to have a good life and chill and to be safe and to feel safe. So if you don't have emotion, it's just like a dead body, okay? So we're not that body. So being emotional at the right time is still good and it will never go away. So how should we avoid emotional investing that will do a negative impact in our strategies? There are 4 solutions. The first one is experience. By going to courses, by losing money at the right time, but you take notes, that is all about the experience. It's about doing the right homework. For example, subscribe to the channel. I'll keep on sharing what I did wrong and something that is really stupid that I've been doing for the past 20 years. I'll keep on sharing in this video. That is something will be more related to the market and the assets, trends and pricing movements rather than our personal feeling, because again, personally is nothing compared to the whole wide market. The second way is really Asian investment strategies. It's called dollar cost averaging. So it's like at a specific time, at a specific amount, you will invest in something monthly, weekly or daily. So that is really something that we should do to prevent we speculate and to make ourselves more disciplined. And dollar cost averaging will be a very safe way to limit your risk, because no matter what, you have a discipline to buy a specific asset at a specific amount every single time. The frequency is the same, the amount is the same. As long as in the long run you have confidence or you have proof or you have analyzed that the country or the asset will go up in general in long term. So you won't happen to overtrade or undertrade in shorter time periods. The third way is to invest in ETFs. That is something that Warren Buffett asks us to do. If you're not professional in investing in something like stocks and options, as long as you think that the country will go up, will be doing good in 5 to 10 years, just buy the ETF. You can buy the ETF tracking the index. You can buy ETF to track the gold, commodities. You can buy leverage ETF, short or long. So that is something that you can choose from, but not really something that you can speculate, because there is no room for speculation. So that is something that can train our discipline again. The fourth one is the easiest, but it's easier said than done, is to be calm every time before you want to make a trade. For example, if you go to do an exam, you really have to have a good sleep. For example, if you go into an event at night, you have to prepare yourself, you have to dress up. If we're doing a trade, that is really important because it's related to money, right? It's really important. Sometimes you will make a bigger investment that will affect 1 year or 5 years of your life. Then why not just calm down every time you want to make a trade to make sure that we have the maximum capacity and maximum function and efficiency in our brain to work out the best plan, best move for ourselves. So this is the video that I'm going to share today. So the most direct way to say that you like this kind of video is to like and share this video to your friends or some of your friends that are experiencing those 4 symptoms. Hopefully, we will trade smartly from now on. Investing made easy. I'll see you next time. Goodbye.